Good morning, this is Steve O'Hare from PIA First, and I'm reviewing the FX Majors, the medium-term outlook, a medium-term picture on there. Market highlights over the past 48 hours. The combination of position adjustment and underlying trade tensions amid aggressive President Trump rhetoric triggered significant US dollar gains during Friday. Italian tensions contributed to euro losses, while EU's Barnier's criticism of the UK government Brexit proposals led to renewed sterling losses. US equity markets were resilient, but European and Asian markets were generally weaker amid concerns over negative fallout from US trade policies. And the commodity currencies lost ground with Aussie dollar at 17-month lows amid trade concerns, although oil prices were resilient and amid ongoing concerns surrounding Iranian oil exports. So we'll look at the euro dollar on the monthly chart. We're in an obvious bear trend, and price action over the last 3 or 4 months now has hung around the 116.30 to 116.90 area. We posted a bullish hammer on the monthly chart for last month, so a little bit of light relief from for the bulls in the market, but we believe this is going to be short-lived. Let's go and have a look at the weekly chart. The weekly chart, we can see this morning star formation posted. The Ichimoku cloud is solid resistance at the moment, and we've also formed on last week's price action. We had a rally, but failed to break above the previous resistance of 117.40. Price action then closed lower as the week went on, forming a shooting star candle on the weekly chart. So that's negative for sentiment on the short-term basis. So let's get a little bit more. Also on a daily chart, we posted a shooting star formation, hanging man candles, and bearish engulfing candles. Actually, a bearish outside day posted on Thursday. Friday saw further selling. We're now looking to sell into rallies around about 116.50. We expect this corrective phase after the drive higher to continue, looking towards 115 as a target area. Looking at cable, the sterling, it was undermined on Friday by month-end selling, especially after a fresh sterling dollar retreat back below 130. Let's have a look at the longer-term charts. The monthly chart, this is reacted from this previous resistance 143.54, and we've had 6 months of negative price action. So although we posted a bullish hammer last month, price action is below the close of that month. So still under some pressure. The weekly chart, we have had the 5-wave rally. We're in the middle of a correction. 78.6% Fibonacci, it comes in at 124.28. We're not looking at that at the moment, and we've had this morning doji star reversal, but obviously under pressure again at the start of the week. So there's the potential for a small rally, but sellers are evident at the moment. Looking at the daily chart, this trend line, the top of the trend line of this wedge pattern, we broke through and have now broken back below it, and so we expect further downside and into this week. So under pressure again, sterling. Looking at dollar Swiss. Monthly chart in dollar Swiss, we have topped out at 103.28, and prices have remained below the key one or the parity level. We had a good sell-off, broke through the 98 support, and now currently trading just around 97, the figure. Support below will come in around 94, this bullish channel higher. So still dollar remaining positive on the medium to longer term picture. The weekly chart, we can see a consecutive negative weeks. This bearish engulfing candle posted, and further selling noted after the break of the 98 level. So still under a bit of pressure, room on the downside for further weakness before buyers return. Dollar yen. The weekly chart remaining within this triangle formation. Expectation to break to the upside in this AB equals CD correction, targeting a move to 124.52, but still a way off. This is on a longer term basis. We're still looking for a break of this resistance, this trendline resistance. This week we're looking at 112.72 as the key level to watch. Currently trading above the Ichimoku cloud, so mildly positive, and further upside expected on that. The daily chart, we had a corrective channel lower, and prices have broken above this channel and moved to the upside. So again, more positive outlook on the dollar yen. Dollar yen on the more medium term picture, we were looking to set longs, or we have set longs at 110.40. So on side of that, target was 112.15. Not quite achieved that yet. Dollar CAD monthly chart, broken out of this ending wedge formation to the upside. So dollar strength again. Currently we're seeing support around 129.47, trading at 130.57 at the moment, so just above that support. And we also have now this upward trending support line coming in at 126.18 if we do get a move to the downside. So definitely more positive on the dollar CAD picture. Aussie dollar monthly chart, as we were just saying about Aussie dollar, this break to the downside. So this is a very long-term level we're looking at. Very key area, around the 72, the figure area, trading just around that at the moment. If we get a break below 71.60, we expect a more aggressive move to the downside. You can see how the bearish engulfing was posted after prices traveled into the Ichimoku cloud, and the negative move looks likely to continue in Aussie dollar, selling Oz, buying dollar. Euro sterling, on the monthly chart, we're in this positive ending wedge formation, bullish ending wedge formation. So again, we've had 5 months of positive price action, and currently trading and being capped by the 91 level in euro sterling. And until we get a breaker there, we expect price action to maybe drift lower, looking for dips to be bought into. So euro more positive against sterling on this more medium term picture. And the euro yen finally, to finish things off, we'll have a look at the weekly chart, which is in the bearish channel lower. We posted a shooting star candle on the weekly chart last week, so further downside expected on this. Thanks very much for joining us for this brief rundown of the medium-term outlook as we see it. We look forward to sharing our views with you next week.